Good morning, Doug.
Hey, good morning. We're live.
Live and active. We kicked off this thing a little later than usual because when I hit the start button, it wanted to update our Zoom video software. So how fun is that?
Well, maybe someone listening is updating theirs right now. Well, they wouldn't be listening.
What about, did you see this last week, Doug? Like, I love ironic things. And guess who called their employees back to the office last week?
You're talking like COVID type stuff.
Yeah.
No clue.
Zoom video.
No.
They did. How fun is that?
I did see something that I thought was really great. I don't know if this was on Twitter or X or whatever it's called, but it was a picture of Zoom's like headquarters, and then one of those tall buildings with the name on the side, Zoom, and underneath it was like, why do they even have that?
Well, now we know they're calling them all back in. Could you imagine? Can you imagine working there and then getting that notification that it's time to come back to the office?
Welcome back,
yeah,
Zoomers.
Yeah, that's quite a change from what they might.
Hey, wait. What was the top line of the disclaimer today?
All stocks are speculative. They can go to zero.
Okay, good. We're going to talk about that a little bit.
Let me hit one. You go ahead and talk for a second.
I thought that's what it said. I just want to double check.
There's something I'm wanting to look up here, and yeah, you go ahead and talk. There's a setting I need to change, and I got to find it while you talk.
Well, I'll talk about something. I love supply and demand, and I have to credit my high school economic teacher for introducing me to the terms. Even, I suppose I learned about it in different ways, but my high school economic teacher is now my mother-in-law.
Imagine that.
And so she taught me about supply and demand. And I was at the coffee shop this morning, and the demand for coffee was like way up. And I was just sitting at the bar enjoying seeing just this interaction of commerce taking place. And I asked one of the barista guys, I said, hey, what's up with the demand today? And he goes, look at my sweater. He's wearing a sweater. He's like, this is the first coolish day we've had in a while. And so just the mindset, ding, time for a hot coffee, a hot beverage. I just thought that was so neat.
That is, it's weird because it's August the 18th.
Yeah.
Isn't that crazy?
And it's not really, I mean, like my son drove to school today with his top down on his car. It's not terrible.
Right.
But that mindset, that shift of, hey, school's back in session. We have a little bit cooler start. Time to get some hot coffee.
Yeah, man.
Yeah, I thought that was pretty great. So supply and demand, we're going to talk about supply and demand today. And we always do that when we talk about the stock market. We're talking about the demand of shares, the supply that's out there, the competition, and something we've been focusing on for the last few weeks now. It's just the competition for stocks has increased. And so that competition looks like money market rates, CD rates, bond rates, anything that's quote unquote fixed investment. Those types of investments are giving stocks a run for their money. And one of our good friends likes to say, your money will go where it's treated best. And right now, there's more competition than ever on stocks. So that's why you're seeing a decline right now, is there's just more competition. There's been more sellers than buyers. It's as complicated as that. And so we're going to talk about supply and demand from the stock market perspective. We're also going to talk about supply and demand from a car purchase perspective. Used cars, new cars, we're going to cover it. And Keith, he hit me up today, says, hey, what do you think about this? We talk about car prices and car decisions and car economics. And as Keith is sending me this idea to talk about, guess what I'm going through? I'm going through calling AAA. I meant to bring my AAA card to shame. Because our old trusty van, the transmission is shot. And so I'm like, hey, man, thanks a lot for bringing up a car economics discussion. But I will tell you, it's one worth talking about because we all go through it at some point in time, somewhere between 3 and 10 years, all of us are making these decisions.
Let's talk about, like, you may know this, I should have researched this. Let's just talk about AAA as part of it.
Yeah.
Like, is that a good deal, or is that maybe not a good deal? Because it seems like I get roadside service with credit cards and things like that. Do you know about that, or should we research that? Like how AAA compares to those kind of.
I don't know how it compares to those types of things. I was looking at my car insurance for this discussion, and I have that on my car insurance. So I have like belts and suspenders going on.
Do you think that's how it works?
I don't know how it works, but here's what I do know. If you're going to be like the Shreves and drive old cars, and when I say old, we can quantify that because old to you might be a year and a half. Old to you might be 5 years, might be 10. I'm talking 10 plus. And so a good friend of mine, I would love it if he called in, if we could take a caller. If my friend from Phoenix could call in right now, I would love to hear from him because a old car would, I don't know, 6 months maybe. But I was looking at our insurance and I wanted to see what our total packages all in cost. And the AAA cost, here's what it does for me. It gives peace of mind. And that peace of mind is nice to have. And it gives peace of mind just from experience. I've had a good experience with AAA. I've ridden in their tow truck. They've helped me out. And so is it the cheapest way to get the job done? Am I overlapping coverages? I have no idea.
Yeah, I'm gonna look into that. I'm gonna get an answer. To just know, I don't know. Maybe one of you know the answer to that question. Like, I think my AAA, and I toned it down because I don't have an RV anymore, but I think I think it has all my family in it still.
Yes. Yeah.
$765, I think, is what I scribbled out the check for in 2023. So that seemed a little higher than it's been to me.
And I don't know what it costs to have a vehicle towed today. My guess is like everything else, it's gone up. But yeah, we have the RV plus like you.
That's what we had. Yeah. So
and I still have it because I'll rent a trailer from time to time, or we'll tow a boat and it'll cover the boat. So
mine covered a 40 foot, maybe 38-foot RV on the Alaskan highway being towed 10 miles. I don't even know what that would cost in dollars. Like, if you didn't have the coverage, it would be a small fortune, I would think.
Yeah, and so just that peace of mind, insurance. I don't know. Is it worth the money or not? I hope you never have to use your insurances.
Yeah,
but it's pretty good peace of mind.
Well, and having 5 children with 5, well, I would call them bangers cars. Like they're I bought the first round of bangers for them, and some of them got banged around, some of them didn't. But to have them on the road somewhere, whether it's at Murray State or whatever, and have that peace of mind that they get towed someplace is a big deal. I'd say the second thing, new and used, that's part of the conversation we're having here. But like, the second thing I would say is, what about the idea of having a mechanic versus a dealership? Because there's different things about that. And for us, even in Murray, Kentucky, we have a on-call mechanic down there for our kids, just so when something does go wrong, there's a place to tow it to.
Yeah. Having somebody as a mechanic is a big deal. Now, it could be at a dealership. Just knowing the person, having a relationship with the person is really huge. That trust factor to know that you can give them your car and it is what it is, and then walk away and drive away and see them again in so many miles.
I think I would say a mechanic could be one of the best financial decisions you make. Like, having a good mechanic. We had our mechanic, when we were young and poor, passed away a couple of years ago, and Jeff's Jeff's Auto is down at 96 in College, and I would take an old banger in there to Jeff and just say, okay, what's it going to cost to keep this on the road? And hey, Jeff, is it worth it? Well, for this expense, will this buy me a year or two? And he would honestly say, yeah, it's worth it, or no, you need to get rid of this thing, Keith. And so as you're trying to accumulate wealth, and if you're driving bangers, to keep your costs down is probably a good way to accumulate wealth pretty quickly as a youngster.
If you're living in central Indiana, no matter what kind of car you have, if you need a mechanic recommendation, call me, because I have a recommendation for just about anything. Like, I mean, I have an old Mercedes wagon that I drive around. You talk about a mechanic's dream. Louis and I are tight. And so even if you have something odd like that, I would love to talk with you and give you a couple recommendations.
Yeah, I think it's a big deal. So there's these are conversations new car buyers aren't probably having right now, because they're probably going to take it to the dealer. But we're just talking between a new and used car, between a relatively wealthy person, somebody that can afford a new car, versus a kid just out of college who really can't afford a new car, is my opinion.
Right.
Yeah. Would you say that's a fair estimate?
I think that's a fair estimate.
Yeah.
I mean, if you basically just took what a new kid out of college or a kid out of college is making, and you take that average used or new car, what do you think? I don't even know what an average.
Well, I got these numbers today.
That the salary to new cars probably close to 1 to 1. I don't know.
The average new car in 2021 was $38,000 to $40,000.
Okay.
The average holding period for a car in the United States, new or used, is 6 to 7 years.
Wow.
And the average loan in the United States is 5 to 6 years.
Yeah.
So I've done some math, and I'll make my numbers available to you as soon as I can double check those, if anybody has an interest in looking at the math on it. But that's the deal. Like you've got a 5 to 6 year commitment to a loan. You've got a 6 to 7 year commitment to a car, and you've got a difference of a $40,000 car or what you can afford. And I did some math on a new Nissan Rogue,
Okay.
and a used one. So like a 2023 Rogue versus a 2015 one. And I was just totaling up the expenses as I could see them, and probably cheated a little bit towards the new one, giving it the benefit of the doubt, because I didn't go into all of the cost of the new one. But the depreciation, if you're doing 10% depreciation, you're probably going to see $2,500 to $3,000 in depreciation on the new one.
Yeah.
Depending on the price of it, you're going to see $1,500 depreciation first year, probably on the used one. You're going to pay $530 in interest on loan for the used one versus $1,065
For that year.
for that first year, right?
Yeah.
You're going to have I was surprised the insurance was pretty close. I was expecting a bigger variance. It was only it was probably 1,000 versus 1,100. Your repairs, I said maybe $500 or more on the used one, so 1,500 versus 1,000, which people think that's going to be a lot more. But if you buy a good used car that's maintained, you're probably going to lower that, but you're still going to pay for oil changes on both of them. Your licenses are going to probably be 200 for the used one versus 400 on the new one. The sales tax that first year.
The sales tax is a big deal.
Yeah, so the sales tax
In
could be
Indiana,
1,000 versus 2,500 or something.
Yeah.
And so you're gonna that first year you're gonna have somewhere between $5,000 and $6,000 kind of out of pocket stuff. Not out of pocket, because depreciation isn't an out of pocket, but that's an expense.
The depreciation is the biggest expense, and that's where I went on
Yeah.
my research this morning.
Yeah.
And I'm a car guy. I really like cars, and I appreciate all y'all's cars. I love it when you come to the office and I get to talk with you about your car. But the depreciation, I did F-150s and Civics.
Yeah.
Just because those are two common cars. They're great cars. They've been sold all over America, and you get just wiped out with depreciation, even on those two great cars. If you go back and 14, 15% a year is what you're losing on these cars. And so on your disclaimer earlier this morning, you said stocks can go to zero or something like that.
Right.
When I've purchased a car, that's the number one thing I think about is what am I willing to just lose in this endeavor? And so that's caused me to buy used cars because I know, okay, if I buy a $20,000 car, I could lose 20 grand on just the depreciation. Everybody's gonna have the maintenance and stuff like that, but I'm gonna lose 20 grand likely on this car. That's the way I look at it.
Well, and when you go into it, even we were talking about my RV, like I wouldn't buy a new one because I'm too cheap, but I bought a used one. So when I did that trade-off, I had to ramp up rather than depreciation, I had to ramp up the maintenance expense, and that comes with a cost as well.
Yeah.
And so depreciation, on the math I did, I used the same percentage. I used 10% of your depreciation. So your depreciation gets smaller, but if you're buying used, you're buying a smaller depreciation because you're buying a lesser asset versus the new one where you see that big depreciation up front.
On depreciation, ChatGPT's suggestion is I threw a bunch of stuff at AI on this topic, and ChatGPT's recommendation was to drive less miles.
Well, so has been our political decisions by shutting down pipelines and running the gas prices up. So gas, people, I think a lot of times when they're thinking about it, they think gas is the big expense, and really it's not when you compare it to depreciation, particularly like if you're going to buy and I drove a Tesla recently and it was a lot of fun, but if you're going to drive a Tesla versus something, you're paying a little bit of premium for that. So and I assume the depreciation on a Tesla is going to be a lot because when those batteries hit the fan, that's got to be a big expense right there to get that thing built back up.
And your car decision is unique to you. We're not going all Dave Ramsey here in this discussion. Your car decision is unique to you, and you might get a lot of joy out of your car. You might get a lot of joy in the process of finding a car, and that is the stuff that just can't be stacked up on a spreadsheet. The joy factor. And so I personally think you should drive something fun that you really like if that's you. It's just how do you get there?
Yeah, and I am not a car guy, so it's pretty funny. Like when I was driving my blue Lumina minivan and Doug joined me, I was saw him give me a kind of a side eye. However, you probably need to moderate what you drive based on where you are in your financial situation, because you can drive fun cars on the cheap.
You sure can.
And we had a friend in here that was driving just a sweet Porsche the other day.
Yeah.
And I don't know that I've been a friend of his for probably 35 years. And I don't know if I've ever seen him drive a new car.
I have not seen him drive a new car.
He drives nice cars though, right?
And they're fun. Yeah, absolutely.
Yeah.
And they're older.
Yeah. So you could be wealthy and not drive new cars, or drive new cars, or you could be not wealthy and drive new cars, or drive non-new cars or used cars. The difference is, I think if you're not wealthy, you have a higher probability of becoming wealthy by learning to drive used cars.
And the other factor for me personally is, you can type in car loan calculator, all this stuff, and you can figure out the numbers just like Keith and I have. But what could that money be doing is the question. And I like to have fun. I like to have experiences. We like to travel places. We like to go on spring break trips, stuff like that. And that's the trade, is you can't have it all. And someone's always got something nicer anyway. And somebody's always got a nicer vacation. But you can do the things that stoke your fire. And if you had that money tied up in a house or a car, that you could be limiting your adventure.
Well, and creativity fits a lot into that. I surprised your friend in Phoenix and you because I drove a Mustang GTH, right?
Yep, that's right.
And I didn't know how to drive it. That thing is just bad to the bone. And I rented it. That's why I had it for a few days. And so you can have a lot of fun and still drive bangers it's just a temporary thing. And so there's a lot of ways to get from point A to point B. I think a book that helped me, and I don't know the title of the book, probably 30 years ago, I was reading it and the guy was talking about gaining equity in a car. And I've never heard anybody say that. And essentially, the way you gain equity in the car is you own the cars that you drive and you keep making car payments to yourself. And when you're ready to upgrade to the next car, you take the equity that's in the car plus your car savings account, and you get the most car that you can afford, used or new at that point. And then you just keep doing that. And you use that car savings account to pay for the maintenance along the way. Because a lot of times, people that aren't used to maintenance, that maintenance surprise, like the van's challenge today, upsets all their cash flow situation. So by having a little car savings account that you make a car payment to yourself once you've paid off whatever car you have for a period of time, I think will reduce your financial stress in getting what did Bob Warren call it? Piece of metal with four tires on it or something. I forget. He called it, something to get you from point A to point B. And for those of you that don't drive a lot, it's sitting in a parking lot a lot anyway. So there's a lot of possibilities. And
that was going to be my other recommendation. If you do drive older cars, you might notch up your emergency fund.
Yeah.
Or your liquid fund or your joint account, your joint investment account. Just have that ready. And normally these days, at least my experience is, have enough in there to pay for your furnace and AC unit and a transmission. If you got that, you're probably pretty good.
Well, and I would say coming out of out of high school into the 1980s, there weren't as many foreign cars on the road back then. And the domestic cars were really struggling with their quality back then. So somebody my age or older, we have this perception that cars break down all the time. And they were on the side of the road all the time. But a lot of these Japanese cars and things have really good maintenance and they're very reliable. And so the idea that you got to get rid of a car at 100,000 miles, that I think it's
even our old van, it's a domestic van, it owes us nothing. It's actually my favorite purchase we've ever made. Yeah, it owes us nothing. Even if I gotta put a new transmission, it owes us nothing. And so it's been maintained well. And to your point, stuff does last longer than it used to. And that's competition.
Right. You can't make a car like you made in the 70s. Yeah. You won't be in business.
No.
Well, even here's another math idea with the car. And car prices are out of whack right now. Yeah. Like the used car prices are higher than they should be. I saw in a report last week that used car prices are down 5%. I think
they're starting to come down.
And I mean, an argument against used cars was I saw over the last 12 months, maintenance expenses have gone up 20% over the last year on cars. But here's a math problem that most people wouldn't say yes to. I have a car that's valued at $5,000 and the repairs are going to be $5,000. Should I just go get a new car? What do you think?
Yeah, I think a couple things. The math, the answer to the math question is just spend the $5,000 on it and keep driving it.
Well, that's what I think. The question I would ask the mechanic is, how many years do you think this 5,000 will get me? Because if it'll get me 2 years, $2,500 is not that expensive. How do you think most people perceive that question?
I think that, at least for me, the temptation is up. We're done here. I'm going and getting another car. And I think that's a peace of mind question. And so if you're just done, if you're tapped out, you're like, I just want something reliable. I'm tired of the brain time on this thing. Then that's fine.
And that goes back to what we said about having a mechanic you trust, because you don't want that thing. It's like a hole in your pocket. If you get a lemon car, just keep losing money. Yeah. Man, that's a lot on cars. We only have 5 minutes. We better hit the markets, Doug.
Okay. Well, the markets have been depreciating. What can we say? I mean, it's July was really kind of the peak of things, and then we've been giving up some steam in almost every area of the stock market. Energy, that's been looking okay. There's been a couple tech stocks that have been holding up all right, a couple retailers that have been holding up all right. That really, if we were to paint with a broad brush, it's been tough, and I attribute that to competition, and sellers are coming out and saying, hey, look, I can get risk-free return in my savings account or CD or whatever.
Yeah, and we hit this on the S&P. I'm just showing you the S&P right now. We hit this point this week on the 50-day moving average, and so that's probably, I think, for the two of us, kind of just tighten our vision of what we own for you. We've got kind of limitations already identified for your holdings that, hey, if this market doesn't get some buyers coming in, we may trim some positions, I think is what our thought process. And you can see the S&P's had a bad week this week. And then if we go to the NASDAQ, it's had a little more dramatic of a week. It's been a couple of weeks for the S&P that it's trending downward right here. So it's getting our attention on the S&P. We started buying over here, or the NASDAQ, we started buying over here. And so I doubt we would let those profits turn into a loss on your behalf.
Zoom out to your monthly. He had its real good channel lines drawn. Yeah, there it is.
Yeah.
And those channel lines are the black lines that are kind of parallel to each other, rising up to the right of your screen. And we like to look at these channel lines because it gives us an idea where the lows and the highs have been. And it's pretty amazing. I don't think I'll ever get tired of it, how markets tend to stay within boundaries. Yeah. And so right now we're testing that.
Yeah, and ideally, I think, like, if we look at this one, what we'd love to see is the NASDAQ to have some buyers come back in the next 2 or 3 weeks.
Yeah, and who knows? I mean, is this an oversold? I don't know. But one of our friends, he said, a 20% correction starts with a 5% sell-off. Yeah. And so, hey, we're keeping an eye on things. We're not anxious. We're just keeping an eye on things right now, and we have the gauges that we can say, yeah, there has been more selling, and so it's a time just to be patient with it, but know that overall things look reasonably well.
Yeah, and that is just the nature of the beast here. The September and August tend to have the sellers come out for a variety of reasons. It's psychological. It's just the nature of how supply and demand in markets have worked.
Hey, one last thing. If the emotions are cranked up on investments or a car or a house or one of those big decisions you're moving, whatever it is, if the emotions are starting to get cranked up, you guys pay us to talk with us, and we'd love to hear from you on it. And be a sounding board for you, or just listen to you and help you with whatever decisions that you're having to go through and face.
Yeah, and I have failed at that in years gone by, and so I appreciate when the emotions get out of control. And one of the ideas that's helped me with that is realizing that decisions aren't all or nothing. You can make incremental decisions. If you bought more car than you can afford, and your cash flow is telling you that, there's incremental decisions to help you through that. If you bought more house than you can afford and you're feeling overwhelmed, there's incremental decisions to help take those off. And those may not be easy for you to think through if you're emotionally attached to what's going on. And we're pretty unemotional at looking at a situation and offering objective input. So don't hesitate to call us if there's things going on inside with your finances that seem peculiar to you or maybe embarrassing or whatever. Give us a call, because I think an objective outsider can provide great insight for you.
All right.
We'll see you guys
I'm
next
gonna
week.
go call AAA.
I'll see you guys.
Bye.